Welcome, my friends. Welcome, everybody, to the SPACs. Boom, attack. Let's get it started. Let's go ahead and bring in my man, the brains to this show, Katje. What's up, man?
What's up, Mitch? What's going on, everybody?
Hey, super excited. Another day in the SPACs attack world. So if you haven't gotten already some swag, definitely check it out, guys. The SPACs attack, baby. We're here. We ain't getting away, man. And one thing, just like this kind of picture in the background, we're like space, man. We're going to Mars. We're going to keep going and rocketing up with the show and rocketing with you guys out there. So smash that like button and let's get this show started. Let's get into some headlines. Let me know how my audio is. If I'm clipping them a little bit loud, let me know, guys. You know, one thing I'm definitely trying to work on is the audio for the show for you guys. So let's just get back into the headlines. You guys let me know. And Chris, take it down.
All right, guys. Yeah, so busy day again. 3 new deals announced today and a bunch of notable headlines to get through. So let's get started here. So up first, we have ACIC. So ARK Funds added an initial position in ACIC, adding 372,574 shares to the ARKQ ETF. Shares were up 14% last night. So this is Archer. This is a urban air mobility company working on the possible, Uber for the skies. We had Archer's CEO and co-founder Adam Goldstein on the show last week on Thursday, the day after this deal was announced, and Cathie Wood wasting no time getting into this, just like she did with Blade. She's a big fan of that urban air mobility market. So no surprise here. We talked about this possibility last week. And of course, we heard, all those great comments from Adam about the future of this company and future of the industry. So keep an eye on ACIC if it is not already on watch. And CCIV was the big winner yesterday, up 32%. No surprise again. This one has been red hot. So Churchill Capital 4, which I own shares in. So Reuters out with a new report yesterday saying this deal is getting close to being done. The working matter now is securing a $1 to $1.5 billion pipe from Michael Klein and Churchill Capital. So keep an eye out on that, as now we have the possible timing coming. And that valued the company at, it looks like, $12 billion. But remember, guys, that $12 billion is based on a $10 share price. So you have, shares of CCIV already trading above $50, implying a valuation of over $60 billion here. So be careful. Again, chasing this one too high. I did sell some shares, take profits, back in the 35 range. But I am holding the rest of my position now, as I think we get another pop when this deal is announced. So keep an eye out on CCIV. STPK was another big winner yesterday, up 21%. We highlighted that yesterday, that they were featured on Mad Money with Jim Cramer on Friday. So no surprise that it got that Cramer pump yesterday. This one has been a favorite of several people on CNBC, so getting a lot of attention in that, energy space. So keep an eye out on that one as well. We had a couple deals announced yesterday, PDAC and SBG. So both of those shares actually ended the day down. So PDAC, nearly flat, down 0.4%, and SBG down 2% with that acquisition of Owlet, a baby care company. So no surprise. This is a trend we're seeing now where these shares, go higher on the rumor, and then by the time they're announced, we see that huge spike in the morning, between 4 and 5 a.m. when people can begin trading on several brokers, and then we see them start to decline. So for me, I'm taking a look at PDAC, as I think, this is a good long-term play. SBG, I have not dove into too much, but that market, the baby care, it's obviously growing, with that new technology. So that's also one worth watching as well. Couple vote dates set yesterday. So IPV, which is merging with AVA, announced a vote date of March 11th. And then we have CFII merging with View, the smart window company, set a vote date of March 5th. So keep an eye out on both of those. As again, we see those trading patterns heading in to those vote dates. DMYD, which is one we've talked about a lot on the show, merging with Genius Sports, the thing behind the thing for sports betting. They landed another deal yesterday with Win for sports betting across multiple states. So again, as these sports betting companies, expand their operations, more states legalize, they need to have relationships with a company like Genius Sports, going public with DMYD or Sport Radar, as those two essentially have a duopoly on the sports data market for sports betting companies. So DMYD, definitely keep on your list if it is not already. Another SPAC to watch is SV. So this is Spring Valley Acquisition. That company filed for a second SPAC. So we know what that means is normally when these second or third SPACs come, it means that that first one could be close to nearing a deal announcement. So keep an eye out. It does not always mean that that deal comes right away, but it is a trend that we continue to watch. So keep an eye out on SV with that announcement that they are launching a second SPAC. And then I want to highlight a new SPAC hitting the market today. So this one will trade as units. This is NVSAU, New Vista Acquisition. So I think we mentioned this one on the show when I highlighted some new SEC filings. This one is ran by Dennis Muhlenberg. He's the former CEO of Boeing. And then it also has Marion Blakey, who's the former CEO of Rolls-Royce North America, also worked for the FAA. And then we have a couple retired Army and national security people and more people tied to Boeing on the board. So this one targeting aviation, aerospace, or defense with a great management team. So this is one I'll be watching today to see where those units trade. 1/3 of a warrant with each unit. So definitely keep an eye out on this one as we go through today. Then QuantumScape. This is one we talked about yesterday, guys, on our watch list. So reported earnings, as Mitch highlighted with that Benzinga Pro tool, showing you when they're going to report earnings. So the thing with QuantumScape is they're still pre-revenue. So as we talk about some of these SPACs, the earnings report, it's not about the financials, right? It's not about revenue because it's not there. It's about the commentary on the future. So QuantumScape, they issued a shareholder letter, a presentation, and the thing that really caught me was this morning, Wedbush analyst Daniel Ives is out with positive commentary on QuantumScape. So talking about how they could have a breakthrough in battery technology, QuantumScape working on that solid state lithium battery, which could have a ripple impact across the EV industry, is what I've said. And he called it the holy grail of EV battery technology in a solid state form. So they're targeting 2023 or 2024 for that electric vehicle battery production. And he said it could really change the industry down the road with that solid state battery technology if they can continue to show an 80% charge in 15 minutes. And then Ives went further to talk about Apple. So Apple entering the electric vehicle space, and they keep, having rumors on who's going to be their partner, and those rumors keep ending up not being true. So Ives is out talking about QuantumScape and their backer Volkswagen being a possible combo partner for Apple and what that could mean. He said that makes sense and, is definitely something worth watching. So I'll keep an eye on QuantumScape. Again, this one traded over 100 last year. And then noted investor George Soros also added a stake in QuantumScape. That was 13F filed yesterday, showing that he owns over 3.3 million shares. So keep an eye out on QuantumScape. And then turning to those three new deals. So up first, we have CFAC. So they announced with AI, this is a LiDAR solutions company. This one has been rumored for a long time. We finally got that definitive agreement. So they see revenue of $4 million in fiscal 2021, $13 million in fiscal 2022. So again, lots of LiDAR companies going public, and this is the newest one out there, then CFAC, valued at $2 billion. And we have AHAC, so a deal with Humacyte, which is a transformative biotechnology company that can manufacture implantable human tissue. So again, working on human tissue and possibly organs down the road, valued at $849 million. This is the same SPAC team that took DermTech public, DMTK, which has been a well-received SPAC. So this is one I'll be doing more research on, and going to probably bring some more details tomorrow on AHAC, as I like that space and I think it will deserve more attention. And then the big deal I want to highlight is AACQ. So this is Origins Materials. This one was rumored yesterday, now announced, valuing the company at $1.8 billion. So this will become the first public pure play carbon negative materials company. Existing investors in Origin Materials, which I think is a key here, are Pepsi, Danone, and Nestle. So those three companies are also investing in the pipe on this SPAC deal, and they'll own 11% of the company going forward. So three big names who are investors, customers, and they're investing again in this SPAC deal. So current AACQ shareholders will own 39.3% of the new company, which is one of the highest percentages I've seen out there. So they have a patented breakthrough platform. They create useful materials by using wood residue and non-food sources. So they expect to be cost competitive with petroleum-based materials and bring net zero emissions produced going forward. So they see a $1 trillion opportunity in that presentation. They have over $1 billion in signed customer contracts, including from those three large companies that are the investors. And then they see an additional $400 million of customer contracts under negotiation. So they're creating a 100% plant-based plastic bottle, which is one of the keys for that partnership with Pepsi and Danone and Nestle going forward. So their first plant will be completed in 2022. Additional plants coming and full-scale commercial plant in 2025. So they highlight leading institutions and companies and also countries that are committing to a net zero future, which plays into their growth objectives. So no revenue until fiscal 2023. They estimate $60 million in revenue. So that revenue ramping up 2025 with that full-scale commercial plant, $475 million in revenue. And then by fiscal 2030, with 7 plants up and running, they see revenue of $4 billion. So shares were down this morning, but this was one that was up 24% yesterday on the rumor of that deal. So again, 3 new deals this morning, lots of exciting headlines. That's what I've got today, Mitch.
Hey, as you guys can see, there's a reason why Chris goes into the depth, not only looking at what it is right now, but what it potentially could be. So definitely, if you need to go back and kind of slow that down so you can get all the numbers in line and write it down, and go ahead. All right, guys. So definitely want to go ahead and get into some of these kind of stocks on the watch list. I just want to mention really quickly. Of course, we've already gotten mention of QS. We got also on the gappers. We got longevity, LOAC, and also SSPK. SSPK is probably still moving based off of that New York kind of catalyst. Also DMYD starting to get near that topping look. I'd be careful with that one. I see it kind of topping out, but really nothing too much standing out. So we'll get right into our interview today. I'm super excited to go ahead and continue to break down the SPAC industry with you guys. So if you guys like these executive interviews, smash the like button below, hit the share button, let everyone know. Right now, Chris, go ahead, introduce our guest. Let's bring him on.
All right, guys. So I'm super excited. Today we're going to be talking about Achronix, ticker ACEV, is ACE Convergence, taking this company public. So joining us on the show today, we have both Robert Blake, the CEO of Achronix, and also Behrooz Abdi, the CEO of ACE Convergence. So welcome to the show, guys.
Thank you very much for inviting us to join you. Good morning.
Welcome. All right, guys. So I'm going to go ahead and I'm going to get out of here. I'm going to let Chris jump right into some questions, and then I'll be back with some of my own.
All right, guys. So let's dive in. I'll try to tailor these questions, to each of you. But at any point, feel free to jump in. I love having both sides of the SPAC deal on the program so we can see what the company is all about and also the SPAC taking that company public. So up first, Robert, if you want to tell us, why a SPAC deal versus a traditional IPO to hit the public market?
Well, we actually started looking in Q4 last year at going public in a conventional manner. In fact, we actually started testing the waters with some potential investors. Then we actually met Behrooz and the ACEV company. And one of the things that was very exciting about working with them and the merger was their domain expertise in the marketplace that we're in, meaning that the data acceleration space for AI machine learning applications. So one of the things that really attracted us to ACE was their domain expertise in this marketplace.
Perfect. And Behrooz, having a SPAC and lots of targets out there, companies that want to go public. I'm sure you looked at a bunch of them. So, how many did you look at, and what really brought you, to taking Acronix public in this SPAC deal?
We looked at over 50 companies out there in all different industry sectors within technology. That was our mandate from day one, to focus on the enterprise IT. But we always had, from day one, actually, we had Acronix on top of the list. We've been familiar with the company from the far. We didn't know the executives, but we knew the performance of the company, how they've done in the market. And we really like the uniqueness of the business model, the technology, and the fact that it's the last remaining public high-end FPGA in the market. As you know, Xilinx and Altera has both been taken off the street, and this really creates a rarity, a scarcity for Acronix that was really attractive. And when we got to know the company, of course, we were pleasantly surprised. That was a lot more there to the business and technology, and we're really excited about it.
Perfect. Can you guys share a little bit about your background? So Robert, talk about some of the companies you've worked with before Acronix, and kind of the founding of Acronix, and then same to you, Behrooz, if you want to talk about your experience in the technology field. So we'll start with Robert first here.
Yeah, so I've spent a long time in the chip business. Started off with LSI Logic, who are building custom chips, and then I actually spent 17 years at Altera, who was one of the leaders in the FPGA space, doing a variety of different things, including all of the strategic planning. So the FPGA space, data acceleration, is an area that I've had a tremendous amount of experience in the last 25 years.
And I grew up in the semiconductor industry. I've been around 35 years in this industry at Motorola Semiconductor. Spent my time designing chips there. Ran the chipset business at Qualcomm. I was a general manager there for a few years in the early 2000s. And then I went to Silicon Valley to run a chip company, a microchip company, processor company for data center called RMI, which we exited into a company called NetLogic for all stock deal, and then into Broadcom for about $3.7 billion in 2009. And then I went on board of a company called InvenSense, which went public, and I ran that till 2017, public semiconductor company in the sensor business, and we exited that into TDK. So that's been my track record prior to launching the SPAC.
Perfect. Awesome, guys. Lots of background in that technology and semiconductor field. So want to dive into Acronix here. So pure play on data acceleration. So what jumps out to me in the presentation is, three big growth areas. So we have artificial intelligence, cloud, and 5G. So, start with you, Robert. These three huge growth areas, when do we really see that ramp up and hit this, $10 billion opportunity that's talked about in the presentation?
Yeah, so we recognized, several years ago that, FPGAs were going to be a kind of a mainstream technology in data acceleration. And as you see this kind of, exciting new growth opportunity for all sorts of high performance compute extracting, new levels of intelligence from all the data that's being collected on a worldwide basis, we knew that FPGA technology and our embedded FPGA technology was going to play a very critical role in that space. What I would say is that probably about 3 years ago, we started the development of our latest generation products. These are FPGAs for data acceleration. We call those by a brand name of Speedster 7T. They're built on the latest technology from TSMC, and we're going to start shipping those products a little later this year. We combine that with a very unique business model to us, where we are the only company to offer high-end embedded FPGA technology. So what that means is companies that are choosing to build their own chips to get the highest levels of performance and cost efficiency can now license a piece of our technology and put it in their devices. And that business model for us is very strong because we bear no manufacturing costs in that business model, and it offers us great expansion into new markets. So I'd say AI, ML in the compute and edge. I'd say that the next piece for us is also in high performance networking for things like smart NIC. And then we also see a very important play for us in 5G infrastructure and also in automotive. So these are a number of very high growth market segments that the combination of our chips, meaning Speedster, and our licensed IP, meaning SpeedCore, go into. And this is really the 10 billion opportunity that we see over the next 5 years that's going to give us a growth rate in that 20 to 25% per year.
Perfect. I want to hear more about Speedster 7T and SpeedCore, but first, Behrooz. So, talking AI, cloud, and 5G, you said this SPAC was searching for a tech target. Were those three of the areas you were looking at? And, the fact that Acronix has, exposure to all three, was that a key here in getting this deal done?
Absolutely. We see data acceleration as a multi-decade opportunity. There's massive demand for data. Everything is becoming data intensive. Even if you look at a car, for example, with the variety of sensors that are coming in with LiDAR and all the technology that's coming in, communication between the cars, each car is basically becoming a data center on wheels. And as these cars start to talk to each other, so-called X2X communication, everything is communicating with each other. 5G is becoming super important. On top of that, all the data that gets pushed around, the intelligence in that data, you need to make the car, the data center needs to make decisions much faster, which is where AI comes in. Everything becomes lower latency and more real time. And that is just a huge opportunity. And that's where really Acronix plays, is has exposure to everything. Robert talked about automotive, the data center, 5G, all that networking, all that is really at the heart of what the product and the technology that Acronix has. And that's what really attracted us to the company.
Perfect. So, Robert, I want to get back to Speedster 7T and SpeedCore. So that was one of the big things in the presentation, that this is really the future for the company's growth. So tell us a little bit more about these products, why they're so important, and how they can ramp up the year for Acronix.
Yeah, well, first of all, if I kind of take a step back, give you, an overview of Speedster 7T is our kind of latest, high-end products for data acceleration. And these chips are what are called field programmable gate arrays. So they're actually programmed by our customers for specific tasks. So when we manufacture these chips with TSMC, they are blank. And then our customers get to use our software tools to program them for specific applications. That gives us this diversity of end markets, whether that's compute acceleration or networking or 5G infrastructure. So the products, have a broad range of applications. What we did recognize very early on in terms of building these high performance chips was performance and low latency were critical in these areas for data acceleration. And so when we designed these chips, we designed them from the ground up to go after these workloads. The exciting part is that we're at the very beginning, obviously, of this AI ML acceleration space, and also fueled by 5G wireless infrastructure connecting billions of devices. And what we expect to see is continuous change in these new algorithms and workloads. And that flexibility is fundamentally built in to our speedster devices to offer very high performance levels. So we recognized, how the market was changing, where this, $10 billion growth opportunity was for us many years ago. And so then we've started to develop our products specifically to go after these high growth market segments.
Perfect. So I'm seeing in the presentation $240 million in orders, and then a design pipeline of $1.1 billion. Any update on those order figures, and what is that kind of broken down as far as confirmed orders and kind of backlog?
Yeah, so if you look at us going into this year, that kind of design win pipeline and backlog that you talk about is comprised of two things. One is firm orders that we have for our mainstream products, and as we entered into 2021. We had a backlog of firm orders of over $140 million. And against our plan this year of 157, that obviously puts us in a very strong position right at the beginning of the year. The design win pipeline that you talk about then is estimated to be over $1 billion. And that is new opportunities for our two latest generations of products. That is Speedster 7T, the product family that's been built from the ground up for data acceleration, and our SpeedCore licensed IP. And when you look at the applications for that, we're engaged in with over 100 different design win opportunities across a diverse set of applications, from compute acceleration in the cloud and edge, companies building high performance network infrastructure products and smart NIC, companies building wireless infrastructure, automotive opportunities for something called sensor fusion, where these radar, LiDAR, video cameras, that data all needs to be processed real time with extreme low latency, and it's a natural fit for our technology. And then finally, a class of new product opportunities in the storage space, where companies are starting to build intelligent storage, or if you like, computational storage. And this is also a very good fit for Acronix technology. So those are the different diverse and high growth market opportunities that our products are targeting. And obviously, we're at a great place to start 2021.
Perfect. And I'll turn to Behrooz here. So, you had the chance to dive into the financials before doing the SPAC deal, before announcing, that this was the target. What was it, as in terms of contracted revenue, the backlog, the future from those new products? What really set Acronix apart in terms of financial strength here?
It was really the quality of the customers and the quality of the design wins and the margins. Gross margins is really very unique in terms of the business model, where you have what Robert talked about, both the product and the licensing model. Licensing model is north of 90% gross margin, and the product itself is north of 65% gross margin. So that blended gross margin, and then you look at the growth path and the quality of those design wins. It's not a consumer product which would change every quarter, where the revenue forecast could change pretty rapidly. These design wins are pretty solid, and that's it's almost like an annuity coming in the future. So that's really the exciting part of the financial model for us.
All right, so I'm going to jump in here. And so one of the things that I've been paying attention to is, if we take a look here, we have the investor presentation pulled up here. And a lot of these, you have some strength in these alignment for these growth markets and industry leaders. Can you explain us these relationships and how you guys are uniquely positioned here?
Yeah. So what this chart shows you is then some of the target customers that we have across these diverse market applications. And one of the things that this kind of picture, or the green boxes on this key, give you a kind of an indication of is which of our products is most highly suited to that end market application. So if you take this collection of different market segments, this is where we represent companies. Here are examples of companies that we target. The market segments are quite diverse, from obviously the top of this chart, meaning AI ML workloads for both our Speedster 7T products and SpeedCore. On the right-hand side, the networking space. And so high performance networking all the way up to 400 gig and 800 gig, transporting these very high performance data streams. The automotive applications for sensor fusion, wireless infrastructure in the 5G space. And then finally, in that bottom left-hand corner, companies that are building computational storage products as well. So very diverse range of high growth customers and applications that we're targeting with those two unique classes of products, Speedster 7T and our SpeedCore IP play.
Yeah, one of the things that I notice is that you have some of the biggest names mentioned here, and I always try to pay attention to smaller companies that can have partnerships with those industry leaders, because at the end of the day, those are going to be able to provide you, I'm sure, consultation, information, data, and that's really what I really like about here. So I'll let Chris take back over, but definitely do like this investor presentation here.
Thank you.
All right, guys. So I want to dive into one of the hot stories out there that we've seen a lot in the industry is a chip shortage for automotive right now. So what are your thoughts on this? How could Acronix help to this? And Biden's recent comments on strengthening the supply chain for chips for cars. So start with Robert here.
Yeah, well, the automotive play for us is mainly a licensed IP play. So that would be our SpeedCore, where these customers that are building automotive solutions will license a piece of our technology and build it in our own chips. So it turns out that as we enter into that business, those customers won't be manufacturing those chips in the near term. That's probably going to be 1.5 to 2 years out. So our expectations are that the problems that we're currently seeing in the industry in terms of chip shortage is really not going to have any impact on our automotive play. And what we're providing is the ability for customers to provide a very flexible, high-performance solution in that automotive space, and particularly in the area of sensor fusion, where we're processing these very high-performance data streams from radar, LiDAR, and video.
Perfect. And Behrooz, any comments on the chip shortage for cars, and what that could mean, going forward, and how Acronix could help tackle this with those licensing deals?
Well, a couple of things. First of all, the foundries, all the fabs like TSMC, Samsung Semi, Global Foundry, they're all making huge investments in capacity. So I do think that capacity constraints going to get much better this year. By the end of the year, perhaps, as those investments come in and more tools and more expansion is added. The other thing is, in the chip industry, it's all about productivity of the chips. The more compute you can pack into a smaller node, into a smaller chip, the less chips you need to do the same work. And that's really, again, where Acronix is coming in by going into 7 nanometer, which is a really super dense node, able to pack a lot more compute power into a smaller chip. And that enables to do more work and more productivity, and actually, quite frankly, more margin for the company in the future in terms of the work that needs to get done with the same chip, with the same piece of silicon.
Yeah, I think that was a real key point there. Maybe Acronix can't immediately solve this chip shortage, but with those new chips coming and that technology, better capabilities, man, that could be a game changer there, to help out in the
Absolutely.
auto industry. So great comments there, Behrooz, on that. So I heard you mention TSMC a couple times. I also saw Intel in the presentation. So can you kind of run through some of your partners and who are the companies that, if you can name, that will license these new products from Achronix?
Yeah, I could say so. Obviously, TSMC is a very important partner for us. From a technology standpoint, we manufacture our latest chips with them, both for Speedster, meaning the standalone data acceleration products, as well as our licensed IP. So that's a very important partnership for us. Another one for us that is very important is a company called Bitware. Bitware is a part of the Molex Corporation, and together with them, we build standard form factor acceleration cards. These cards are called VectorPath, and they plug into standard rackable servers like Dell and HP for performing a variety of different acceleration tasks. So that's critical for us also. And then finally, I would say the software tools piece of our business is important. We have a set of software tools that enables customers to design their algorithms and into our chips. And that set of software tools is called the Acronix CAD environment. And one of our critical partners in with those software tools is a company called Synopsys. So those, I would say, the very key relationships that we have from a supply chain. Obviously, you saw then the customers that we focus on in that diverse set of applications. And without going into specific names of customers, I'd say that the targets on those different market applications are all customers that we target with both of these new classes of products.
Perfect. So I want to get into possible competition. So I want to hit on this from both of you here. So from maybe a couple angles. So Robert first, and you don't have to name any specific companies, but what or who do you see as your competition, and what's the key factor or factors that just really make Acronix stand out and be differentiated here?
Yeah, so I'd say first and foremost is we are the only company that has a dual strategy of offering high performance data acceleration FPGAs and licensing that technology for integration in chips. One of the trends that you are seeing is that larger companies in the data center space, in the networking space, in the automotive space are choosing to go build their own chips. And they're doing that for a variety of reasons where they need to achieve the highest levels of performance and efficiency. And so that puts us in a very unique position, is that nobody else in the industry has that combined strategy of chips and IP. So that, I think, is one that's most important. If you then look at the Speedster series of products, what I would say there is that what we go after is performance. If you look at the latest generations of products that we built on 7 nanometer with TSMC, those products have been aimed for high performance communications and AI ML acceleration. And what I would say there, it's flexibility and performance. We're at the very kind of early phases of these new workloads. A massive appetite for processing extremely large data sets, and that will continue. And so what we've designed our products to do is to have massive bandwidths of on and off chip data transfer in the form of something called Ethernet at 400 gigs and 800 gigs. The industry's highest bandwidth memory interface to be able to support those things. The analogy I like to give people is this: if you're building a race car, you put a big engine in it, you'd better make sure that the fuel pump is going to continue providing that engine to be able to work. And so the analogy for us is in the memory space, we've chosen to have the highest levels of memory performance, both on chip and off chip. And that is a requirement in terms of processing these high performance data streams. So in a nutshell, we're the only company offering embedded IP, and our Speedster 7T is really a performance play.
Perfect. And, Behrooz, so turning to the SPAC side, so, you had the chance to take, any company public. You may have even seen some other semiconductor plays when doing this research. So, you've seen the competition out there. So, what's the what's the biggest differentiator, for Achronix here in your mind, coming from the SPAC side of things?
So beyond the technology differentiation that Robert went through, here you got a really great technology company that is in a massive TAM. So $100 million of revenue in a $10 billion TAM is only 1.5–2% market share. So Acronix, especially with the SPAC, with the capital that comes in from the SPAC going public, they can get to $1 billion revenue and still remain a single-digit market share. So there's just such a huge opportunity in front of Acronix that doesn't have to run into stiff competition to grow and really create a very, very healthy business. And you can call it a niche, but it's $1 billion niche just to get to that revenue, and then we'll play to the next game, get to the next step. So that's pretty exciting. It's very rare to find a company like that has that much of an opportunity ahead of it.
All right, excellent. So I got one more question here. So one of the things that I've been looking at, guys, and I think everyone should kind of do this, is I start looking a little bit forward, right? A little forward looking, not so much at the company right now. And so one thing I'm noticing is kind of the adoption in AI and how everyone's kind of moving towards that data-centric view. How will this impact the company and the business in the next 5 years? And do you see this trend just continuing?
Yeah, no, I think we do. This kind of picture, looked at the kind of old world versus the new world. I think what was happening is that this demand for new levels of compute efficiency, forced people to look for different ways to solve things. And so it turns out that that is going to continue. The data sets are getting much larger. We're going to collect all sorts of information with the billions of 5G connected devices. And then what we're going to try and do is extract value out of those things of new services that we've simply not even dreamt up yet. As that continues, there's going to be this insatiable demand for new levels of compute efficiency. FPGA technology is now right in the mainstream alongside CPUs, GPUs, and other ASIC technology for doing these accelerations. And obviously, the play for FPGA technology, it's performance and flexibility. And we think that we've got the right balance between those two as these workloads continue to change over the next 5 to 10 years. And so this is an exciting opportunity. We recognized this many years ago. And obviously, what we do is that we develop our products to address those needs. You mentioned the key companies that we focus on. We get very good insight from those companies as to the new challenges that they have in compute and networking. And that's how we define the products and services that we build to address those future needs.
Yeah, definitely. One thing we always talk about here at Benzinga is the thing behind the thing. And you guys can see that you guys are essentially filling in that role. A lot of people kind of look at the system overall and looking at the bigger companies, but you're really essentially the framework in how these companies are really advancing. So definitely super excited to watch how your company grows. And I'll let Chris ask any viewer questions that we got.
Yeah, I'm trying to find some viewer questions. So I saw a lot, again, about the Biden plans and the administration, which it looks like we hit on. So I'm not seeing any new questions here. So it looks like that's going to wrap up, guys. So, big thanks for both Robert Blake from Achronix and Behrooz Abdi from ACE Convergence joining us on the show today. Again, Achronix is going public via SPAC merger. Ticker is ACEV. So thanks to both of you for taking the time to join us on the show today.
Yeah, thank you.
Thank you for your time.
For inviting us. Enjoyed the conversation.
I appreciate it.
Thank you, guys. We look forward to following the progress.
Thank you.
Definitely. We'll have you guys back.
All right.
All right, Chris. So, hey, keep working hard and bring you guys the information that you guys need to unlock these SPACs, because at the end of the day, that's what it's all about, guys. If you don't have the information and you don't do the deep research, then you're just the uninformed trader. And that's what Chris and I really did this show for, is for you guys can be informed in the SPAC industry. And there's not many people doing this every day. I don't think there's really is a person doing this every single day. So definitely smash the like button for us if you're getting some value out of this. One of the things that we want to get to is maybe some tickers from the chat. But if you guys want to talk about this ticker that we just mentioned, go ahead and mention some things in the chat, and we can kind of expand on. But Chris, definitely, one thing I've noticed is that change, of how data is being processed. I mean, it's no longer going to be just in one central location, like in one office, just this one computer. It's a lot of it's going to do with that cloud computing and how we're transitioning in towards that cloud computing. And then also, with that cloud computing, we need faster speed, right? So then you think of the data processing, and you think of how hey, 5G is definitely going to come into play in the next couple of years. So what do you think about the industry overall here?
Yeah, that's what really stuck out to me was, AI, 5G, and cloud. Those were three big areas that I've looked at to make investments in, right? Because I see them all as growth markets. And here you have Achronix tackling all three of them. They're a pure play. They have technology that no one else has. And the thing from that interview that really stuck out for me was when talking about the chip shortage, right? And they may not have an immediate answer right now, but as Behrooz said, if they can make better chips that have more capabilities in them, then you have to ship less chips. So could that be the possible, way to solve this chip shortage, is having better chips and shipping less of them rather than shipping, a massive amount of chips that are needed for these connected cars in the future? To me, that really stood out. And, you hit it on the head again at the end there, Mitch, as we've talked so many times, on this show, on other shows, the thing behind the thing, right? So chips, semiconductor, they power everything, right? So as we move to connected cars, as we move to AI, 5G, cloud, you need this technology. And, Acronix has it. And man, that I enjoyed that interview. And, ACEV, I'm going to take a hard look at, because this one looks like the future is bright.
Yeah, one of the things that I've been looking at is when are these kind of technology SPACs coming? Because at the end of the day, if you look at majority of portfolios nowadays, a lot of them are heavy in tech, right? And a lot of big portfolios you're going to find are really heavy in tech. One thing that I've noticed that we had, and we had this in kind of early December and into January, we had a rotation away from these big tech stocks. And the question is, when that rotation goes back to the big names, are we going to see kind of these technology SPACs kind of take off? And so that's why I would look for these plays to kind of get them at a discounted price to maybe get myself a good position for when that industry gets hot again. You've been seeing a little bit of a pullback and not so much of a focus on these technology SPAC or technology big blue chip stocks. When you see that rotation get put back on, see these SPACs, see how they react to that, see if there's a laggard play there for you, and maybe you find a late moving rocket there. So I'm definitely going to keep these one on watch, whether it be this one or TBAHR. There's a couple of them in the semiconductor, and then a couple technology, really. I'm going to be in one that is looking for technology plays. That's Supernova. So we'll continue watching these, and as the rotation to the big stocks happen, we'll try to catch that to see the momentum that happens in these smaller tech names. All right, so really want to talk about some of these SPACs today. I am seeing us take a hit, but to me, this is probably the overall market just taking a hit. Let's take a look here, and this is what happens sometimes, guys. And this is why you also need to keep in mind the overall market. It's not just I just watch one stock and keep trading. So right here, guys, I'm going to put it up here. We are getting a little bit of a pullback day. I'm going to pull up the 15-minute here on the SPY so that we can see the dip. And this is why everyone's saying that everything's taking a hit right now. At the end of the day, yeah, we're having a pullback day. But is this like an extreme pullback, or is this a normal pullback? And this looks like a normal pullback. I mean, we're not even down a percentage for the day, a point there. So what you're seeing is kind of just a pullback, guys. We always have these kind of pullbacks and then the extension out. The question is the channel kind of following? We've been kind of trading in this channel coming up on the SPY. And then the question is, are we going to continue here? If you hit that trend line, let's draw this out. All right, Alt T. So one thing I definitely mentioned is that you have this kind of channel that we've been trading in. And when you get to the top of the channel, sometimes you're going to see these pullbacks, guys. So keep an eye on this and see if we can, pull back closer towards that bottom band, and then you can get back in. And that's how people have been doing kind of this buy the pullback mentality. If you buy the pullback near this bottom line and then ride it up towards that top line, that's kind of a Bollinger Band and range look here. But if you look at it, it's kind of been going up in this kind of linear pattern, and now you got close towards that line, so you get a pullback here. The question is, are we going to come back down all the way towards this kind of 380, 378 area, or are we going to push back up and through and out of this channel through 400? So that's going to be really interesting to watch there, Chris. I don't know how you've been seeing the overall market, but I have been seeing a little bit of an extension. And the real question is here is the rotation that's going to be put on. I've been noticing more of a reopening trade getting put on. Chris, I don't know if you noticed that.
Yeah, I noticed that, and I heard Randy and Spencer talking about it before our show. So, guys, if you only tune into SPACs Attack, reminder, we run live all day, 8 a.m. to 4 p.m. Eastern time. And, some of the content that fills in between our structured shows is, some news desk updates and some movers. And Mitch, I know you were on one of those yesterday talking about, which stocks were moving. And I heard Randy and Spencer talking about, airlines. I saw you mentioning, cruise ships this morning in pre-market prep chat. So, reopening is definitely, one of those trends that everyone should be looking at. For me, I've looked at Live Nation before, as we push to concerts. And then as I talk about, that turning to SPACs, that share care merger, right? So FCAC, they're working on, certifying venues for concerts and sports to show that everyone has, either gotten the vaccine or that they had a negative test. And I think that's a key there as we look to reopen. It's still, people want to feel comfortable. So how can these companies open their leisure activities, but also make people feel comfortable, about going, on cruise lines to theme parks? So that's a trend for me too, is the thing behind the thing, who's going to provide the technology and the data that shows, these places are safe. But I have looked at a couple of airlines. I have looked at some cruise stocks. So I definitely see that trend, that I know you pointed out, Mitch.
Yeah, one thing I notice is that the market tends to look forward-looking, guys. It doesn't tend to look forward-looking in this week, this month. It's more like 6 months out, if not even a year out. And so you got to start looking at that forward-looking. And this is something that I've been practicing as of late. Is just, when is this going to shift over from, okay, we're out of the neck of the woods, we're at least the deep part of the woods, and moving towards, some kind of normalcy, because what we're seeing, and at least from what I've seen, is that the vaccine news is that potentially in kind of June, July area is when you're supposed to see that kind of shift where everyone can get the vaccine. And how far out is that? That's about 6 months, 5 months out. And so I'm kind of thinking about that, and I'm starting to think of what plays can happen because of that. And if the vaccine becomes readily available, some of the things that I'd see first get a lift would be hotels, airlines, and companies like that, because at the end of the day, they haven't been able to even do kind of business, at least the cruise, even do any kind of business. And so I think the moment you start seeing any business start, it's kind of going to be a little bit late. You're going to be a little bit late to the move, and the investors are already going to be in because they're forward looking. And so this is why I'm calling it and calling the reopening trade. I've been talking about it since Monday. I think you got to keep an eye on it. And also, one thing that I don't know if you've seen, Chris, I saw a couple of cruise commercials. I haven't seen a cruise commercial in forever. And so you're seeing them on TV.
That, and that could be a positive sign that, they're spending money on marketing because, A, they're hurting, but B, they're ready to, open back up. So, and I think the other trend to watch is, a lot of these hospitality plays, your private companies are really hurting. Do any of them try to go public now to raise money? So either a SPAC or an IPO, and are they going to be able to capture a valuation based on pre-COVID numbers? Or are some investors going to be able to take advantage of, beaten down numbers and pick up one of these companies on sale? I mean, if I see a hospitality company go public now, that's what I'm going to look at is, are we paying for the recovery, or are we getting a stock on sale here? So that's another trend to look for on these reopening plays.
Yeah, definitely. And one more to mention kind of in the SPAC industry, before we get on out of here, is we've been seeing a lot of news come out on battery plays. So let's say Helion and then now QuantumScape. So with that, you've been seeing Romeo Power take a really step back. So I'll go ahead and I'll pull up the Romeo Power chart here. And you really been seeing it take a hit. I think a lot of this just has to do with the other catalysts and kind of market share understanding and thinking that, hey, all right, so maybe Romeo Power has a little work to do to build up being the leader in this industry, and we need to keep an eye on to see some bottoming action again. So we had bottoming action in this 18, and then we just completely cracked it. A lot of that had to do with that Helion news, that first crack, but then yesterday, of course, the QuantumScape news coming out, and then it getting hit again today. So I'll be looking forward to get kind of closer towards its 14, which is the next area of support here. And if we can get near that 14 area, I'll definitely be interested kind of if we can get down there and then maybe take a flyer check here where I can risk about $2 down towards 12. And then look for a move back up towards 24. That would get me about a $10 upside with a $2 risk. So essentially a 5-to-1 look. And that's what I always look for, guys. It's about risk and return and profit loss ratio. So I look for 4-to-1s, 3-to-1s. And if I can get a 5-to-1 look, those get me into the math probability. So a lot of trading, guys, has to do with math probability and keeping yourself in the probability to be right. You're not always going to be right, but one thing you can do is keep the math probability on your side. So learn how to do that, guys. If you haven't done that before, start looking this up, because this is one advantage and edge that I think every trader needs, is establishing a process that they're going to repeat, rinse, wash, and repeat, and then creating the probability aspect because they rinse, wash, and repeat a system versus being all over the place with their trading. Chris, I know that you probably have seen a lot of traders out there try to be all over the place with SPACs instead of sticking towards one strategy. So this is kind of how I'm going to pay towards SPACs. Definitely, guys, find what works for you. For me right now, it's just getting them close towards that $10 and holding for the pop. And sometimes I'm going to have to be patient. It's not always going to happen quick. Sometimes I'm going to need to wait, and you just got to consider your time value and how much your money is valued and held up there. But to me, this is almost like a savings account. And to me, a savings account with a tiny amount of risk but a good potential return, I'll go ahead and I'll load into some savings. I got no problem with that.
Yeah, definitely. One of my strategies I've been doing more and more is buying the units, right? So I mentioned at the top of the show, so New Vista, so NVSAU looks like it did price today, 1061. So again, those units, you're getting a common share and you're getting 1/3 of a warrant. So you're buying in and you're able to, buy close to net asset value. And you're also getting, that portion of a warrant, which provides some upside to where when those units split, you can, either hold the units, you can split your shares to common shares and warrants, or you can sell, common versus warrants. But this is one where, again, paying attention to the team. So the former CEO of Boeing, targeting airlines, aerospace, or defense, which are all hot sectors right now. A strong management team, a sector that I have seen the market react positively to, and then getting your shares close to net asset value. So we're going to be doing more shows talking about SPACs that are trading between 10 and 11. That's something we have seen, as a lot more of these are trading, higher valuations pre-deal announcement, or they trade up on that rumor. So like today we had, AACQ yesterday was up 24% on the rumor, and then today it's trading down after announcing the deal. So people ran this thing up on the rumor, and then today when it actually gets that deal, they talk about, net zero emission, all this positive commentary, going forward, that partnership with Pepsi, Danone, and Nestle, and shares are down. So, pay attention to some of these management teams, get in before they get run up on these rumors, and then, know your exit points. Do you want to get out when the deal's announced, when the deal is rumored, or are you holding, for the long-term growth? Or do you possibly look to sell part of your position, take profits, hold the rest, or do you sell and then time an entry to get back in? That's another thing I'm looking at, right? Just because I believe in the long-term growth of a company doesn't mean that I need to buy before, hold it, watch it drop, and keep holding. You can time your exits and your entries, if you can pay attention to these trends. And that's another thing that we'll be talking about more at our upcoming boot camp this Saturday, talking SPACs and options, and we will have Julian Klimachko from Accelerate. Guys, if you have never been tuned into one of the shows when we have him on, he is an expert when it comes to SPACs, talking those trends, buying units, common versus warrants, a great asset in the SPAC community. We're happy to have him, at that boot camp. So again, guys, I dropped the link in the chat. Make sure you register, to attend that. It is free. So check out that great event, and Mitch and I will both be there. I think you're muted, Mitch. That new mic.
Hey guys, so right here, guys, the BenzingaBootcamp.com. Go ahead and hit it up, guys. At the end of the day, if you're not there, you're definitely going to be missing out because it's full education, guys. It's not like we're trying to get you guys some picks. We're trying to teach you guys. So if you want to start learning, you want to up your skill level, you know where to be, and I'll see you on Saturday, guys. So last thing before we leave off here, I seen mentioned a couple times XL. So XL is another one that's in that kind of same industry that we've been talking about with these different stocks. And one thing that I'm seeing, guys, is that the bottoming action is getting interesting here. One thing I could go off of is this high on December 9th that is close towards this 1830, and it closed actually at 1718. So look for this kind of $18 area. I'm going to look for a quick dip into that area, see if we get some volume or maybe some news to come out on XL. But it's seeming interesting as we've had this sideways period for a certain amount of time now, and we'll look to see a bottom near that 18. All right, guys, like always, guys, we're going to keep working for you guys on SPACs Attacks. If you guys enjoy us, definitely hit that like button, hit the subscribe bell down below. Let everyone know where they can learn about SPACs because, hey, there's not many people doing this.